Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the companies that's been extremely volatile and actually really disappointing for investors over the last 6 months to a year is Virgin Galactic. Now, I'm a shareholder of this company, and I would really like to see the company introduce space travel to a mass number of people, which is, I think, something they could do. But they have to get to profitability first. And so that's why I want to go through 3 red flags to look at for Virgin Galactic and maybe what management can do to get past those. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. If you like this video, check out my newsletter, Asymmetric Investing, where I'm covering companies with high potential like Virgin Galactic. I'm going to start with the company's most recent update because I think this gives a good idea of where Virgin Galactic is sitting. From a cash position standpoint, they have about $980 million of cash as of the end of June. Now, look at that compared to today. $910 million is the company's market cap. So they could potentially just close up shop and actually return more cash to shareholders than they're worth today. The cash flow for the most recent quarter was negative $135 million. I think we can ballpark about $150 million of negative cash flow per quarter. And that's really the challenge for the company. If we assume that is correct, you get about $600 million a year. There's less than 2 years of runway on the balance sheet right now. That's not including $50 to $60 million to build the Delta spacecraft. That's the next generation spacecraft, which is going to be able to hold more passengers and fly more frequently than their current spacecraft. So that's really what's going on from a balance sheet perspective. So red flag number 1 is really this cash burn and the fact that there's only a couple of years of cash on the balance sheet. The company is going to have to continue to raise cash somehow. And that's really where we get to the second thing. One of the interesting things with Virgin Galactic is that they actually need their stock price to remain relatively high just to remain viable as a business, because they're going to have to raise somewhere in the neighborhood of $2 billion to get to the point where they can build enough Delta spacecrafts to get to cash flow positive. You can raise money in 2 ways. You can sell debt or you can sell equity in the company. As the stock falls, it makes it harder to raise money with equity, and it makes it less attractive for debt holders to potentially finance something like a convertible notes offering that would convert to equity at a certain share price. So this falling stock price is really a double-edged sword for Virgin Galactic. And that's why it's the second red flag that I think is really concerning for the company. The third thing is actually something I have overlooked for a number of years with Virgin Galactic, and that has been a mistake. And that is insiders selling the stock. Richard Branson was the one who founded this company. He has exited a vast majority of his position. Chamath Palihapitiya with Social Capital launched the SPAC that merged with Virgin Galactic. He exited his position, I believe, entirely. And when those kind of insiders that had a big position in a company like this exit a stock, it should put off alarm bells for all of us as investors. There was a lot going on during the pandemic, and there were excuses for those sales. That's something that I overlooked. And right now, the challenge for Virgin Galactic is who's driving the ship? Who's making the big decisions? Is that still Branson? Is it the current executive team? There's nobody who owns a controlling stake in the company that you can really follow behind. And I think that is a challenge right now for Virgin Galactic. Like I said, something that I overlooked in the past, but we'll keep a closer eye on in the future. And it is a red flag for me. Something that I think about as an investor in this stock is that a reason to just bail? Is that there's not a clear leader right now? So those are the 3 things I think investors at least need to be aware of with Virgin Galactic. The company is burning cash. The falling stock price makes it harder to survive to get to the point where they can reach sustainable operations, and insiders have sold a vast majority of their shares. Well, what do you think about the future of Virgin Galactic? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.